Right, hello then everyone, as we're at the end of another week of trading on Friday the 17th of May, and it has been a CPI week, inflation week. I say CPI with PPI then on Tuesday as well. Kind of started the week relatively quiet, some business confidence figures out of Australia, but they don't really mean too much for us. When we had the other data throughout the rest of the week, UK figures, unemployment rate slightly negative, but in line with consensus, and nothing major from the labour market in the UK. Wages up, unemployment rate up slightly, so kind of not really too much to see there when it comes to when it comes to the UK. But with PPI then on Tuesday, as you can see, higher than consensus. On face value, you would expect that to be a strong print, right? But downward revisions to the previous month, so it was down 0.3%, or downwardly revised 0.3% from the month before. So the market kind of took that as a bit of positivity and then ran with it into CPI. CPI then, naturally, the way that inflation has gone over the course of this year, people expected it to be high, right, and probably beat consensus, but it did not beat consensus, right? Core CPI month over month in line with consensus. Core CPI year over year in line with consensus. The total rate of inflation month over month slightly below consensus, and then the headline figure in line with consensus. All of these down from the previous month, right? You then see retail sales coming in negative. So inflation not pushing any higher, right? Inflation coming down for the most part, right? Kind of disinflation maybe kicking in again, plus then weak retail sales, sparked fresh hopes for interest rate cuts, which then the market run with, and has run with over the course of this week. Now, if we go over to the charts and have a look, you can see your Aussie, Kiwi, Euro, and Sterling are to end the week higher. Dollar Swiss to end the week higher. Dollar CAD to end the week higher. Dollar Yen to probably end the week, not to end the week higher from Dollar Yen, because you're downside across kind of Tuesday, Wednesday on Dollar Yen. I'm not going to end the week higher on that one, but I suppose from Monday you're kind of flat on the week actually when you look at it. Whether that ends the week higher or not is not really what's so important. What is important is the fact that we've seen broad-based US dollar weakness. Broad-based US dollar weakness in line with downside in yields, right? Downside in yields, downside in the US dollar means upside in stocks, and you can see stocks have trended higher again this week pretty much across the board. Certainly across the board in the US. Their European counterparts not really the same, but positivity still does remain when it comes to the DAX, the Euro stocks, and the FTSE. You would have to imagine a bit of a pullback today, but we do have options expiries over the course of today, so maybe a bit of random price action, a bit of volatility, and a bit of pullback in stocks to end the week is not too unsurprising. So CPI not pushing higher has then the reaction that it has had. We'll call it a dovish reaction. Obviously not dovish because we're kind of talking about the central bank when we say hawkish and dovish, but at the end of the day, pretty positive week across financial markets. And does that continue? Does it not continue? I think no matter what happens, I think stocks kind of want to go higher at this point in time. So as I said at the start of the week, buying the dips on the dollar probably, or buying the dips on stocks probably a good idea. And the US dollar, it's having a bit of a pullback in today's session so far, but that's kind of a necessity and a trend. There is certain levels we can look to play. We're coming back into a support level on the Aussie, or prior resistance, now potential support. A bit of a pullback in euro dollar, not too much levels, but back to 108 would be a decent level to buy at on euro dollar. Cables not got too many levels in and around here, but a retest of these highs back here makes sense. Kiwi's got a bit further to go to get back to this prior resistance in order to trade that, but I do have some kind of levels in play in the dollar to sell a rally. Stock indexes, you gotta look at buying the dips. Where you buy the dips is a different question. Anything back towards 52.40 would be a good buy in the S&P. Probably not likely to get that in today's trading session, but I think it was a 29th or a 26th day of all-time highs on the S&P so far this year. It's on track to make its most fresh daily all-time highs in any year in history. So it's super positive at this point in time when it comes to stock indexes, and any economic data that is weak sparks hopes of interest rate cuts coming a little bit sooner from the Fed. Now potential for September, but markets do kind of get a bit ahead of themselves. I mean, inflation doesn't really come down that much, but again, positivity in markets, and that's kind of how you've got to look to play it, I think. And apart from that, it's not really much else for us to talk about. It's kind of no fresh headlines, geopolitically, nothing major from central bank officials. Jerome Powell kind of reiterated the stance that they are probably going to cut interest rates again. His confidence on inflation coming down has weakened a little bit, but still does believe inflation will continue to come down in the months ahead. Kind of sticking to the script of what they said the last time. But I think hikes certainly for now are firmly off the table. So market participants had come to the conclusion we may actually go and get them. I think it's pretty clear, certainly from a central bank's point of view, that that's not what we're going to get. We're certainly not going to get the 3 cuts that they initially told us back end of last year, start of this year, but that's fine. Whether we get 1, whether we get 2 is a different question, but certainly hikes off the table for now. Positivity in markets, and that looks set to continue into next week. So then you got to look towards next week. Some PMIs and stuff out next week, but we will talk about that when we get around to on Monday. But certainly for now, dollars lower, yields lower, stocks higher to end the week, and that probably looks set to continue into next week.